was supposed to be a flat day, but right after Jerome Powell started speaking, and he mentioned something that spooked investors. Like, this is going to be potentially a very big game changer in how the market trades for the next couple of months, even for the next couple of the remaining months of this year. And if AMC is continuing to follow this track, to what Jerome Powell said, he mentioned that, well, we could have bigger rate hikes than we expected. And I mentioned this exactly last week when he published, when we published the results and started answering questions around what the Federal Reserve is going to do, what's the game plan according to this inflation getting out of control. All right. So he mentioned that we're going to have 7 interest rate hikes this year, each possibly indicating, not confirming, but possibly indicating that's going to be for 0.25% each. Now, today, he was attending a conference on businesses, with other businesses, and he said that, well, we are open to actually have the possibility of lifting interest rate to 0.5%, that is 0.5%, so more than what the market was expecting in future meetings as they battle inflation that was already running too high before Russia and Ukraine war pushed up commodity prices. So just to say that if you look at the price of oil again today, it gained another 7.5%, which ultimately, if this continue to be the case, then the inflation reports, the inflation status is going to be a little bit higher than what we expect to be for the next coming months. We already know it's going to be high. But the question now is, if this oil continue to be this high, above $100 per a barrel, and food and wheat and everything else, it's not going to be cooling inflation anytime soon. So that's why I believe Jerome Powell is kind of leaving the door open for them to do more than what they communicated to the market, because this is one of their core mission. They have to make sure prices remain stable, even though it means slowing down the economy on purpose. Now, it's getting interesting because by slowing down the economy on purpose, it doesn't not only affect some of the market sectors, because people will start to see this as no more growth, and no more growth in the world of high interest rates, literally is a death cross for some of the high convicted tech stocks or the growth stocks or the hyper growth stocks that we already know. But there is a surprise effect here. And the surprise effect is, well, last week the market gained significantly and has been gaining for 4 or 5 days consecutively after the Federal Reserve mentioned that, hey, this is what we're going to do. But now, no one knows exactly if they're going to stick to it depending on how inflation goes. So this definitely will impact the way the short sellers operate, because we know that everything now is mostly algorithm trading, all right? Machines controlling the volume, controlling the prices and everything. If you hold AMC stock, it shouldn't be surprising to you. Now, the thing is, those algorithms are coded by humans, right? Even though these are what we call AI or machine learning, that those algorithms or those machines can evolve on their own. But the thing is, when you have a surprise effect, they are caught off guard, because the people who coded those, the Wall Street boys, need to actually tweak the coding behind the algorithm to let them know exactly how to operate. So by increasing the interest rate by double what it was supposed to be in the next coming meeting, for example, then it changes the whole strategy that short sellers in AMC stock, for example, already had prior to what the Fed was supposed to do 2 weeks ago. All right. So the bottom line is, if not only they have to slow the economy down on purpose to kind of cool inflation down, that will not make things easier for any short seller out there. But because the short sellers in AMC stock are way overextended in terms of margins, in terms of debt, then they will be hit even more harder. And that is the surprise effect that could potentially have a huge impact on the share price of AMC, because they might be definitely and once and for all obliged to get out of the short positions. And that's how they start covering. And by covering, it shoot the price up. So I know we already know, and we're already waiting. Some of us are tired about, what may happen here, because we've been holding for more than a year now and nothing seems to be changing, whether it's from the rules and everything. But You cannot be in a play like this. You cannot be as shorted as AMC and not being impacted one way or another in the kind of market that is ahead of us. So I'm just saying, again, it's just a matter of time. How long again? Nobody knows. But it doesn't mean that